Today we're issuing two new reports on the commercial property market, one on the Irish investment market and one on the Dublin office market. So we had a really good, solid opening 3 months for commercial property. In terms of investment capital flows, we saw about 507 million invested in commercial property in that 3-month period. Not surprisingly, very strong capital flows into the office sector. So over half of that capital was invested in the office market, so about 275 million. Good strong appetite as well for retail space, and not surprisingly very healthy capital flowing into the residential sector. Now in the 3 months alone, just 29 million invested in PRS and standing stock, but a further 40 million invested in terms of forward commits. And as the year progresses, we're expecting those figures to expand. So somewhere in the order of €1 billion we expect to be invested in the PRS sector, but probably predominantly in terms of forward commits. In total, somewhere in the order of about 2.5 billion will be invested in commercial property, and that figure will be significantly greater depending on the treatment of Green Property REIT. Now looking specifically at our office report, we did have a very strong opening quarter with over 50,000 square metres of space occupied in that 3-month period, so very healthy demand continuing for office space. There's about 470,000 square metres of space under construction, and that's double the long-term trend, and of that space, 51% is already pre-let and another 13% is committed or reserved. So again, very healthy demand for that new space. So this is putting upward pressure on rents. At the moment, we would expect rents to rise this year, somewhere in the order of about 4%, coming in at the year end at around €673 per square metre. And that reflects contracting vacancy rates and that strong demand for new property. So overall, a very solid opening quarter for commercial property and a healthy year ahead overall.